Hi everyone, welcome to Trading Success Podcast. And what are we going to cover this week? Well, we're going to review what happened last week because we did have some news that came out that did have some effect on the market. But generally last week, in terms of the daily range, the market was fairly subdued compared to what we'd seen in prior weeks. So we'll have a look at that on the charts. We'll also review what's coming up in terms of news this week, see how that can affect the market. Then we'll look at the charts on the S&P 500, the NASDAQ, Bitcoin futures, oil futures and gold futures to see where those markets are placed and what are the support and resistance levels to look for this week. So let's get into it, shall we? So last week in terms of financial news, what came out was we had the GDP number was fairly strong on Thursday night. We had our typical unemployment claims, which was fairly based on estimates, it was around the same. We had core PCE, which was also around the estimates. There was no surprises there. And then we had Chinese manufacturing come out on Saturday, which was a little bit lower than what was to be expected. Interesting to note, a lot of the PMI news that comes out is under 50. Typically, if it's under 50, it means the economy is slowing. So that's also something to look at in terms of PMIs. We've got the PMI coming out this week. If we look at the news coming out, we've got PMI coming out on Wednesday in the US, which would be Thursday morning our time, I believe. And then we've got Thursday news. We've got jobs coming out, and then also we've got non-farm. So that's Wednesday. That's Wednesday morning our time. Then we've got that Thursday morning jobs opening. All right. So interesting to look at these numbers, particularly because we've got the FOMC meeting coming up on the 19th of February, which is where they're going to be obviously talking about interest rates and seeing if they're going to make that official announcement on those rate cuts like they've been talking about. And we've also got non-farm payroll news Thursday night and also Friday night as well. So there's a fair bit of news later on in the week. We had a public holiday, Labor Day in the US on Monday, so the markets were closed Monday afternoon in the US, Tuesday morning for us over here in Australia. So there was no trading on the US close, but the market still traded on the US Open. Also, too, in terms of earnings results, last week Nvidia came out on Thursday afternoon, Thursday morning after market for us. And there was a bit of a sell-off, but then the market recovered, and we'll look at that very, very soon. This week, we've got Hewlett Packard reporting and a few other bigger names, but I think the last bank of financial news we have coming out, or financial earnings we have coming out, is at the end of September. We've got Micron and Costco, FedEx, a couple of really big companies, Oracle, Adobe as well, coming out later in September. So that's it for the financial news. Let's have a look at the charts, shall we now? Alrighty, so let's first look at the S&P 500. We're using the E-mini S&P 500 futures chart. This is the daily chart. So pretty much last week I spoke about this imbalance, this daily balance that we're in currently. So this was from Thursday prior, so back on the 23rd of August. The market is still trading within that balanced day. So we can see last week, so Thursday morning, the market sold off after that Nvidia news, but then we rallied, and look where the market rallied. It basically failed at the low, and then it rallied all the way back up to the high. Now, Friday, the market once again tested the high, but we couldn't break it. Monday, on the public holiday, the market broke, but we're still trading within the balanced range. So once again, balance rules apply. I would be very focused on this. If you were trading, these are very important levels. You want to see the market test the high, which is up around 5665. If the market gets out of this high and we start to see the market hold above this high, we could probably see this market go and test 5688 up to 5700. So that's kind of like the expansion range that the market's going to try and test if it breaks out. If it fails up here, or if it goes up to these levels and starts to sell back down, then I'd be looking for this market to come back and retest this daily low, because this is the balance range. This is very respected levels at the moment on the S&P 500. If we look at where the S&P 500 is in terms of the weekly chart, you can see we're struggling up at this 90%. And this is where the market has been. You can see we're quite balanced on this. For pretty much, we're in the third week really of balance. So we're in basically a 2-week balance, potentially a 3-week balance still in the market. So, obviously the market's waiting for news, but we have seen the market do very big move down, big move up, and now we're in a bit of consolidation and accumulation before the next move. Let's have a look at the NASDAQ, which is one of our popular markets that our traders trade. So NASDAQ is a little bit weaker than the S&P 500. You can see the S&P 500 is basically back up to its 90%. It's almost back up to its previous highs. NASDAQ is still struggling around the middle of that prior range. So NASDAQ is not as strong as the S&P. So if we look at where we are in terms of this range, we can see the market is basically in we're in an expanding range, because we've gone from a lower low to a higher high here, and now we've gone into a lower, we've got a higher low. All right, so we're making higher lows. So if this market wants to continue higher and break the high, then this market's going to be in this trending type state. But interesting to note, the market is holding above that 50 on that daily chart at 19,580. That's a very key level. If the market can hold above 19,580, I don't see any reason why this market is not going to test this 76 up around 19,800, and then we could get up to the 20,000 mark. And if we break outside of this liquidity zone, this sell zone, we could be going up into these expansion clusters up here. All right. If we look at it on a weekly level, you can see we're struggling to get back up to the 76 at the moment on the weekly chart, but we are holding above the 50%. So that's fairly bullish for the NASDAQ after that quite a strong sell-off. And we double bottomed down here as well. Now let's look at the Bitcoin chart. Now, Bitcoin, you can see the Bitcoin has been really struggling to get above this trend line here and this bearish trend line here. Market is very much trying to go bullish. You can see on the daily chart, we are swinging up. We have swung back down, but we are making higher lows, which is what you want to see. Now, in terms of the most recent range the market is trading in here, we are trading within, we're holding support. We've double bottomed on the daily chart at the 76.4 fib. Now, this market, it is holding. If we look at the weekly time frame, you can see the market is, if we run a fib over the weekly time frame, you can see we are holding, we're struggling to hold above the 50% of this range here. So yeah, Bitcoin's looking a little bit bearish on the weekly chart, especially because we are in this downward stair-stepping type pattern. All right, so we are swinging, we're trying to swing down. We have swung back up here. We haven't quite swung back down in this leg, but like I said, if you can get back above the 50% of this level and start to swing back up, then we could be starting to break out. But this market is, once again, it's very subdued. I think the markets are waiting for these interest rates to come out. I think once interest rates come out, if they cut the interest rates, then I think Bitcoin will start to increase, because it'll just mean that it's a potential sign that the US dollar is still being devalued. And I think gold will follow suit as well. Well, we may as well look at gold while we're talking about gold, see what gold's doing. Now, if we look at the gold daily chart, we can see gold is trading within this range here. We are in a contracting range because we're going from higher low to lower high. We have been trending up. You can see we've been swinging up. We're holding the trend indicator, but we're holding above the 50% as well. So gold traders, if you're investing in gold, you'd yeah, it's holding strongly at the moment. It looks like to me it's in this accumulation phase, just waiting for this next break up higher. So I think if we keep holding above the 50%, which we have done for the last couple of weeks, holding above that 25.20 mark, I think gold is still looking very bullish. Oil is very much contracting. Oil is in a really weird state right now. It is so geopolitically controlled, particularly because of the US dollar is very much backs the oil market. Though a lot of these BRICS countries are looking at ways of how they can get out of trading in the US dollar, and we already see that a lot of the BRICS nations are using other currencies to sell their oil supplies. So I don't know how that's going to fare for oil long term, but I think it's very much directly correlated with the way the US dollar is going, and also obviously supply and demand issues with oil. But at this point in time, I haven't really been following the oil market closely, but I do know it looks like it's very much in a contracting type nature, and it is going to break out one way or the other, bearish or bullish. Obviously, it's going to be determined on geopolitical situations, but it's geopolitical news, as like it always is, and also supply and demand, and oil inventories and this type of thing. OPEC controlling the market as well. So at the moment, the market's looking very, very contracting and in a very tight range. So nothing in terms of big moves on oil, but still very tradable. But if you're looking for longer term investments positions in oil, just tread very carefully because it really is undecided in its direction. Anyway, that concludes the Trading Success podcast this week. Hopefully you've enjoyed it. You got some great tips and some ideas. I'd be watching those indexes this week. I think it's going to be a pretty tight range once again. Just watch those daily ranges to see if the market can break out of those levels, particularly on the S&P 500. S&P is looking a little bit more bullish than the NASDAQ at the moment. But overall, I think these markets will be testing these highs. It looks like it wants to break out higher. Anyway, trade what you see, not what you think. And good luck this week in the markets. Bye for now.